I would accept that there's lots of little special factors here and there, but I think, and there's certainly tons of supply in Australia, no doubt about it, and there's been lots of international buyers, mostly from China in many parts of the world. But reality is house prices are always ultimately about money. Cheap money and cheap money being taken away. And the reason I think global house prices are slow is because we've been taking cheap money away for the last year or two. And of course, generally what happens is you take it away and the big cities slow first and then it spreads out. I mean, how many times have we seen that in the UK, starting in London and spreading from there?
The disparity between the hotspots, and good morning to you, by the way, Happy New Year. The hotspot and the prime, which used to be, for instance, in London, you know, South Kent, Chelsea, Knightsbridge, but then prime spread to places that I got used to inhabit, you know, the outer areas, the SW15s of the world in London, what have you. And it's the same in Manhattan as well, less trendy areas up and down the island, well, yeah, it basically became more and more shishi as well. You know, it became up and coming. So I think that the disparity between these hotspots and the rest of the country in the United States, in the United Kingdom, and in Australia as well, I mean, if we're taking those three markets, has been absolutely enormous and is at pretty much near record levels.
Well, it has been high, but I still go back to the main point that the slowdown always starts in the hotspots, in the prime, and in the big cities, and then slows into the regions. And that's the pattern. You've seen that for 30 years across lots of countries. Australia doesn't really work because basically it's 6 cities, and that's kind of, there's not much else to it.
What we are talking about, of course, is the top end of the market here. For the middle income bracket and lower, how do you see the current trends? Because breaking down the housing starts numbers for the States as we came into the holiday period, it was clear that there was a pickup in housing starts and construction permits for multi-family blocks. But when it came to single-family units and formation, then that was a weaker number. That was a negative number. What do those trends tell us, if anything, about the direction of travel?
Well, that's very interesting. And actually, you know, you could see a slowing US housing market in the forward-looking data several months ago in the States. You know, when bond yields back up, that slows housing. It's as simple as that. And of course, bond yields backing up was the theme last year. And now we're seeing the follow-through effect with housing in general slowing across much broader swathes of the economy than just Manhattan and so on. So undoubtedly, one of the reasons bond yields is falling, as we've seen in the last few weeks, is because the engine of growth in the US, the housing market, has been rolling over for 6-9 months. And where housing goes in the States, so goes the economy. That's the old saying, and it's clearly playing out now.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.